How much did you actually, organic sales growth, 8% increase in pricing, and that was obviously partially offset. So your organic sales growth, how did it compare to your forecast from earlier in the year, John?
We were ahead. On the fiscal year, we went in with a range of 2 to 4%. We delivered 7. We delivered 7 on the quarter, along with 7% bottom line growth, 12% on a constant currency basis, and 99% free cash flow productivity. So you mentioned the headwinds. They're real, but our team, the group of people that I work with every day, are doing a tremendous job in overcoming those and delivering for consumers, for customers, for each other, and for share owners.
As far as the profit just missing, what you tried to manage through all these things. Did China play into that and some of the problems in other parts of the world, supply chain issues? What was the primary result for maybe just missing on the bottom line?
First of all, it's a penny.
But you multiply it by the shares outstanding, John, and it's a real number, right?
Second, that strong top-line growth of 7%, to your point, Joe, was delivered in the context of a minus 11% in China and minus a significant number in places like Russia and the Ukraine. So it really speaks to the strength of the broad-based business. 9 out of 10 categories grew sales in the quarter. We built aggregate market share of about 50 basis points. Things are good.
I don't know whether you've got a monitor. You're now down, 2.6%, and a lot of times CEOs don't really comment on the immediate reaction of a stock to results. But in this case, I think it might be more of a reaction to the world that Procter & Gamble is trying to operate in right now. Kind of what we saw with Walmart. A lot of these things are beyond your control at this point. Do you? And I've asked everyone like Procter & Gamble or anybody we've had on. What was your overall hike in prices? Was it 8%? Because Pepsi was 12. Was yours 8%? And have you cut down on the packaging or the amount that you're selling of any of your key products, John? Has that been part of it?
It's different across categories, but the aggregate number was about 8%. Our primary goal is, despite those increases, to increase the value proposition that we offer consumers. So we're working hard to couple innovation, which improves performance in daily use categories where performance drives brand choice, to help offset that pricing impact so that consumers see a value accretive proposition, not a value dilutive one. We're also offering products at different price points. You can buy Tide Power Pods at 50 cents per load. You can buy regular Tide Pods at 30 cents per load. You can buy Simply Tide Pods at 20 cents per load. So we're trying to recognize the different circumstances that consumers find themselves in. We're working very hard to maintain or build value despite some necessary pricing.
Hey, John, we did get a negative GDP read yesterday. There's no question that the economy is slowing, and I think people immediately start to turn to, does that mean consumers are trading down if they're feeling pinched by inflation and other issues? Are you seeing that? Are consumers trading down?
We see it a little bit on the margin, but again, when you look at the strength of the quarter, we don't see it broadly. One of the things that we look at is our private label market shares as an indication of trade down. They're up very modestly in both North America and Europe, and importantly, we're building share at the same time.